The US has an aging population. We have a lot of baby boomers that are past the retirement age of 65 and are fairly getting up there in years. And many of them need additional, healthcare while in their living situation. And they need to live somewhere where they can have a nurse and doctors and so forth take care of them. And I've invested in a REIT, a real estate investment trust by the name of CareTrust, that provides housing for older people where they can get that type of health care. So it's a really good situation for people that they could live comfortably and get that health care they need. My name is Victor. I'm an active value investor. I have an MBA and a lot of business experience, and I try to use that experience to analyze companies thoroughly. And I like to share that information on YouTube. If you like such information, consider subscribing to my channel. And please give me comments, whether you like CareTrust REIT, you like my videos, you can provide some feedback to help me improve the videos as well. Let me tell you more about CareTrust. I scorecard all my investments. I follow a simple, clear, and consistent process in order to continue to improve. And I like to follow that process, and I've tweaked it a little bit for REITs. And I have 4 questions followed by the decision whether I want to buy, hold, or sell this particular stock. First, do I want to be a part owner in this company? Do I understand the business? Can I make a good decision about this company? And do I like the industry? Do I believe management is performing and operating the company well? Do I see that the dividend payout, which is pretty high for this company, is less than 80%? And I want a discount on the stock. At the end of the day, my aim is to make money on this investment. And by getting a discount when I acquire the shares, it gives me a path to making money in the form of appreciation in my stock. Based on the answers to those questions, I either buy, hold, or sell this stock. This story is simple on this company. It costs a lot of money to go to the hospital. And those hospital visits can just break a family's, budget, drive people into bankruptcy. And some people just can't live on their own at home. They need some healthcare. So this was a solution to providing assisted living with a level of healthcare that a person would need. Therefore, if the person can afford it, a lot of this housing and so forth is Medicare approved. So that's positive. So I like that CareTrust came in and created a living situation that really met the needs of people in this age category. The industry, I like real estate investment trusts. It's not my favorite investment. I like the high dividend. This company pays a high dividend. I do think they're a little more stable than let's say a technology growth stock. But I'm also not expecting to have a multi-bagger on my hands. It's just a nice, consistent, return, and with a high dividend, which is nice because I do have a component of income that I try to generate. The revenue of the company has grown over the years. Over the last 4 years, it's grown 25%, which is really good to see. It's good to see a company, even a REIT, grow revenues. Looking at the most recent quarter that was closed, I like to see that revenue is consistent. In this case here, revenue from 2022 is a little bit lower than 2023. So good to see that small growth in revenue year over year if you compare the first quarter in each year. They were profitable in the first quarter of this year, which is good to see. Last year, they were not profitable because they wrote down one of their properties. They took a write down on one of their properties. So, but this year they're nice and profitable. So it's good to see. So the company pays a really nice 5.35% dividend, and they have, plenty of resources to pay that. REITs have a special rule where they have to pay out most of their income in the form of dividends. So they always pay a nice big dividend. The earnings per share, it's expected they're going to be at 91 cents per share, good profitable year. And their PE, these companies tend to have a high PE because they're very consistent companies. And historically, they are at 37 PE. I'm going to use around 37, probably upgrade it up to 40. And last, the dividend payout ratio is 76%, which is an important factor that I consider. I never want to see like a REIT paying 120, 130% of their dividend, because that means they're going to run out of cash at some point. It's just not a healthy balance. Their balance sheet looks really good. I like that it's consistent. If you look at the balances in every category, it's nice, consistent balance sheet. Looking at their statement of cash flows, it looks really good. Their cash flows are also consistent. If you look at the first quarter of 2022 versus the first quarter of 2023, you had a little bit of rise in cash flow from operations, and the purchases of plant, property, and equipment, CapEx, was about the same as well. Overall, it increased about 1% if you net out free cash flow. So it's nice to see just a small increase in free cash flow. I'm going to value this company using two methods. One is to discount the dividend they pay, and the other is to use earnings per share. They pay an annual dividend of $1.12 per share. And I have a formula here that I use, and the discount rate that you'll use in that formula is 8%, by the way. And if I use that method, I get to a value per share of $18.67. The company's trading at $20.94. So just using the discounting and valuing based on the dividend method, the company's actually trading at an 11% premium. Now let's take a look at earnings per share. It's expected they're going to be at 91 cents. I'm going to use 38, which is a good number. They've historically have hit that number, and I think it could be up to 40. Expect them to grow at 3%. And using this method, and I put the formulas down here if you want to do this math on your own, we get a value per share of $29.80 using the earnings per share method. Current stock price is $20.94. So there's actually a discount if you look at the earnings per share method of 42%. I combine the two, equally weighing each side, and there's a discount available on CareTrust of 16% currently. So the stock's been doing well. It went up 11.8% year to date, which is very good for a real estate investment trust, almost keeping up with the S&P. Now, REITs have not done well this year because interest rates are so high that instead of investing in a REIT, you can go invest in a bond. But this one here really showed that it's a quality real estate investment trust. The other thing I'll point out is you see a lot of volatility up and down, up and down. I really like that in a stock because when it hits a low, if I do my homework, I can buy shares at a discount, and then it rises again and I get paid that big dividend. So it offers up a lot of opportunity to buy this stock at a discounted price. So let me go over the scorecard for CareTrust. It is a company that I want to own. It's an industry I want to be a part of. This is a good category within real estate investment trust. The management team's doing a great job. They really operate this company well. I like the consistent statements in revenue and the balance sheet and cash flow, real good consistency. The payout ratio is 76%, so less than 80%. So that dividend is nice and safe. And it offers a tiny discount. So I put a little check mark there. Overall, I'm going to hold my shares at CareTrust. Now, if the stock price drops, I have information on my fingertips. So if it were to drop maybe 10%, I'd probably buy some shares. But at the current price, I'm going to hold off and just wait to get their next earnings release and see if the fundamentals changed and therefore causing me to put a buy or a hold or a sell decision on this stock. Hey, thanks for watching the video. I really appreciate it. Do me a big favor and hit the like button on my video and consider subscribing to my channel. I welcome comments on CareTrust or my videos. Would really love to hear from you. And keep in mind, I like recording videos to share my experience. This is not financial advice. I'm not recommending you buy this stock or sell it. This is really just the form of entertainment and education. Thank you for watching the video. Good luck investing in 2023.